Okay, everyone, let's get started again with another question dealing with cash flow statements. Again, we're getting into investing activities, but by now we should have a little bit better handle on operating activities. So what I'm going to do, first of all, is review exercise 16.7. Okay, so and also for today, you can tell from your email that I've also assigned problem 16.1a. Again, just the operating and investing sections. Okay, so again, compare your answer to what we're going to do on the board right now. So if we go to exercise 16.7, it says here, use the Western Environmental Inc. information given below to prepare a cash flow statement for the year end June 30th, 2020. A note is retired at carrying value. Okay, well, for that, a note at carrying value, we are going to use that in our financing activity. So that's not going to really be relevant yet. Okay, retained earnings. It says here, the only changes affecting retained earnings are profit and cash dividends paid. Okay, well, how much? We don't know yet. But we do know our profit is 103,600. Okay, so that's our starting point. So, well, we are given enough information now. We know how much our dividends are going to be because we can use that information to compare 2019 to 2020, but we don't need that yet. Okay, for dividends, we will worry about dividends in the financing activity section. Okay, now we go to the next point. New equipment is acquired during 2020 for $73,980. Okay, that's going to be very important. Okay, the one thing we don't know though is yes, it was acquired, but was it acquired for cash? So we're going to have to make a mental note of that, and then when we do our investing section, that's where we'll be able to figure that out. Okay. D, profit on sale of equipment costing $61,980 during 2020 is $3,600. Okay, so there's a gain on the sale of equipment. That's important too. Why? Because first of all, we've got to back the gain out of our operating section. Okay, and we've got to add in the cash received from that sale in the financing activity area. Okay. Prepaid expenses and wages expense affect other expenses on the income statement. Okay, yes, we know that. We're going to have to adjust upward or downward. All sales and purchases of merchandise were on credit. Okay, so the first thing that I want to do is right off the bat, I want to go look at my income statement. Okay, and I want to add back my depreciation. So in this case here, okay, depreciation, that'll get added back, and that is $70,380. Okay. Now, I'm going to look on the rest of the income statement. We have a gain on the sale of equipment. Okay. Gains get subtracted. Again, this is not an income statement, it's a cash flow statement. So what we're going to do is we're going to back out the gain, the accounting gain. Okay, and then in our investing section, okay, what we're going to do is we're going to, in this case here, well, what's the gain from? Gain on sale of equipment. Okay, so that will be in the investing section. Okay. Gain on sale of equipment, and then we have lastly, do we have anything else? Gain on sale of equipment? No, that's it. The rest is going to be strictly off the changes in current assets and current liabilities. So let's go ahead then. Let's look on our balance sheet. The first thing that we'll do is look at our AR. Okay. So our AR, accounts receivable, went up. How much? Well, it went up 26,400. So we have an increase in AR. So an increase gets subtracted. Now, inventory went down. Okay. So when we have a decrease in inventory, we add the difference. Now, what else do we have? Prepaids went up. We're going to subtract the difference. Now, the prepaid expenses went up 240, so we'll subtract 240. Now we'll move on to the balance sheet, or sorry, the current liabilities. AP went down. So when we have a decrease in accounts payable, we subtract it. Now we have wages payable went down. Wages payable went down in this case, 10,800. Subtract that. And lastly, income tax payable went down, okay, by 1,440. Okay. So that's it. Okay, that is it for the current assets and current liabilities. So we're going to add all that up, and what do we get? We get a net cash inflow from operating activities of, so this, 160,300. Okay. Now from there, all we've got to do now is create the cash flow from investing section. Okay. So again, it's done in 3 parts. So we have enough information here. We're good. Now we'll move on. Okay. So what I'm going to do is I'm going to erase the operating section. And swap in investing. All right, so again, that's where I said you've got to be aware of what's happened here. So we have, and again, what I like to do is put it into the accounts. And I want to recreate the transaction. Okay, so I know equipment, which is equipment starts at 150 and ends at 162. Now, if you didn't have any other information, you'd think, okay, well, we must have bought equipment for $12,000. That's not the case. Now, I want to put in our accumulated depreciation. We start with 18,000, and we end with 34,800. Now, so this is our starting point for investing activities. We want to lay out our assets if these accounts have changed. Now what I want to do is I want to go and read the information again. A note is retired at carrying value. Well, we'll worry about that note when we come to the finance section. New equipment is acquired for $73,980. Okay. Well, 150 plus 73,980 is now 162. But again, we're building this up. Now, let's go to accumulated depreciation. We know our depreciation expense was $70,380. So now I'm thinking that the cost of the equipment that they disposed of had to be the difference of 150 plus 73,980 minus 162. We're going to use the same logic for accumulated depreciation. So the profit on the sale of equipment costing 61,980. Wow, they even give it that to us. We could have figured it out on our own though. Okay. So I want to prove that we're right here. 150 plus 73,980 minus 61,980 is 162. Okay, so that's right. So we're going to need this piece of information here. Now let's go to accumulated depreciation. What's happening there? Well, again, 18,000 plus 70,380 is 88,380, not 34,800. So we'll subtract the difference. That has to be the accumulated depreciation related to the equipment. And we're going to see how all this ties in a second. Okay, so minus 34,800, 53,580. So I'm going to use this information here to then recreate my journal entry to see if this all works. So the profit on the sale of equipment costing 61,980 during 2020 is 3,600. So again, recreate the journal entry. Equipment gets a credit of 61,980. We have that gain. The gain on the sale was 3,600. I don't know how much cash proceeds we received from that sale. Okay, but this is telling me, okay, that I think I've got to use this in here. Let's see if that works. So 61,980 plus 3,600 minus 53,980 equals 11,600. Now, I don't think that's right. Why? Because I'm looking at the answer key. 61,980, yeah. Gain is 3,600. Oh, the accumulated depreciation is 580, not 980. So now it's going to work. So that's a difference of 400. So yeah, the cash received is $12,000. So you can see it's a lot of work to calculate the investing section. Okay, so let's go now. So we're going to have cash received from sale of equipment. Or proceeds from sale of equipment. You can use that terminology as well. And you're also going to have cash paid for new equipment. So we weren't given any information. Now, usually what I'd want to do is I'd want to look at the long-term note payable to see if that amount went up, okay, or it went down. Now, I'm given the one piece of information that says here that a note is retired at carrying value. So that note has nothing to do with getting a note to purchase equipment. Okay? So then, what I want to do is use this number. So we must have paid cash for that. So minus 73,980. Okay, and then we'll use the proceeds of $12,000, which we got from our journal entry that we recreated. Okay, so that's it. You'll add these two up together, okay, and you'll get a net cash outflow from investing activities of minus 61,980. So again, we're getting used to now doing these two sections, and then next week we are going to start covering the finance section. Okay. So for now, again, compare this answer to your answer and to what you got to the answer key that I sent out. I don't even remember, last week, I guess. And then I'd like you to try problem 16.1a, the operating and investing section. Okay, so it's going to be very similar to what we just did. All right, that is it for today, and we will talk to you tomorrow.